What's up, guys? I'm just here to tell you that these next few months are going to be really, really interesting. And I have a really interesting story to talk to you guys about. So, Brian Armstrong, CEO of Coinbase, you might like him, you might not like him. He's clearly a brilliant mind, and he's moving the cryptocurrency industry forward and in a lot of good ways, too. And he just hit a really big bump in the road. And I think that it goes to show, because like for me, I always thought that he was extremely friendly with the regulators. But it just goes to show that maybe he was even kind of naive into what their overall goal was, because I'm sure they were saying that, they're here to help him and kind of follow the process. And all along my journey in crypto, one of the biggest things that people always say is that, follow the regulators. If you give them information, they're not going to really go after you. That's kind of been the thing that we're always told about this. But I have something to share here. So pulling up right here on his Twitter page, I was reading over this a little bit, and this came right here. Look at this. So after months of trying to engage with the SEC on our planned Coinbase Lend product, we recently received notice that it intends to pursue legal action against us. We believe dialogue is at the heart of good regulation, even if the SEC may not. So you might be saying, well, what's their Lend product? Their Lend product was they were going to offer consumers, right, you and I, an opportunity to earn right around up to, I think, 4% in interest through their USDC. So you can put up USDC, which is a stable coin, and you can earn up to 4% interest. This is unheard of for the consumer. Usually we put our money in a bank or a savings account, and we earn somewhere about 0.0001 interest. And in some cases, the banks are even charging us to leave our money in the account. So this offering is kind of unprecedented, and it's something that's really big for the consumer. So the fact that this is that they're going against this, it kind of tells you where their heart is and what's going on here. And they've been extremely forthcoming with the SEC with everything. They're actually one of the ones who do it better than anybody else. A lot of other companies just kind of go out and do it and kind of see what happens and where the chips may fall. So I wanted to go ahead and read a couple of things from Brian here. It's a little long, but bear with me here. Here we go. Story time. Really sketchy behavior coming out of the SEC recently. Millions of crypto holders have been earning yield on their assets over the last few years. It makes sense if you want to lend out your funds, you can earn a return. Everyone seems happy. A bunch of great companies in crypto have been offering versions of this for years. Coinbase came out recently and said we would be launching our own version. We were planning to go live in a few weeks, so we reached out to the SEC to give them a friendly heads up and briefing. Look at that. They're actually going through it the right way, giving them a heads up, working with regulators like they say you should do. And this is what happens. They responded by telling us this lend feature is a security. Okay, seems strange. How can lending be a security? So we asked the SEC to help us understand and share their view. We always make an effort to work proactively with regulators and keep an open mind. They refuse to tell us why they think it's a security and instead subpoena a bunch of records from us. We comply. Demand testimony from our employees. We comply. And then tell us they will be suing us if we proceed to launch with zero explanation as to why. So this communication you can already see is one-sided, right? Look, we're committed to following the law. Sometimes the law is unclear. So if the SEC wants to publish guidance, we are also happy to follow that. It's nice if you actually enforce it evenly across the industry, by the way. But in this case, they are refusing to offer any opinion in writing to the industry on what should be allowed and why, and instead are engaging in intimidation tactics behind closed doors. Whatever their theory is here, it feels like a reach land grab versus other regulators. Meanwhile, plenty of other crypto companies continue to offer a lend feature, but Coinbase is somehow not allowed to. Gensler in his confirmation hearing, quote, "It's important for the SEC to provide guidance and clarity. Sometimes that's a clarity that will be a thumbs up, but even if it's a thumbs down, it's important to provide that." Now, he said that in March of 2021. If you don't want this activity, then simply publish your position in writing and enforce it evenly across the industry. So the SEC's goal is to protect investors and create fair markets. So who are they protecting here? And where is the harm? People seem pretty happy to be earning yield on these various products across lots of crypto companies. Shutting down these will arguably be harming consumers more than protecting them, and by preventing Coinbase from launching the same thing that other companies already have live, they're creating an unfair market. In May of this year, I traveled to DC to meet with every regulator and branch of government I could. The SEC was the only regulator that refused to meet me, saying we're not meeting with any crypto companies. That was right after we became the first crypto company to go public in the U.S. Gensler has been confirmed just a month. Gensler had been confirmed just a month prior, so I brushed it off as the SEC is still getting its feet under it. Now I'm not so sure. We've always tried to be good actors in the space. Lending is a sensible regulation, even when it is difficult or expensive. We try to think about what products we would want for ourselves and what risk we would want our families to be aware of before launching projects. We will keep following this approach. Yet here we're being threatened with legal action before a single bit of actual guidance has been given to the industry on these products. If we end up in court, we may finally get the regulatory clarity the SEC. We may finally get the regulatory. Let me start that over. If we end up in court, we may finally get the regulatory clarity from the SEC. The SEC refuses to provide, but regulation by litigation should be the last resort for the SEC, not the first. Our door remains open. Hopefully the SEC steps up to create the clarity the industry deserves without harming consumers and companies in the process. America could really use us all working together to figure this out right now. So what are my thoughts on what's going on? I honestly believe that this is kind of what a lot of people in the crypto markets have been saying for a long time, is that the government is out there for the big business. They're out there for the big funds. They're out there for the hedge funds. The SEC has been allowing so many things to happen on the Wall Street markets that it does not regulate, right? They have this arm of that's supposed to regulate all these different things to protect consumers. But what I've noticed is that all they do is use that as a ploy to kind of get other stuff done. You'll hear that term all the time. We need to protect consumers. Consumers were buying up. If you guys remember the naked shorts that was going on with GameStop, and when people saw that they were shorting GameStop, the average Joe said, you know what, we're going to buy these and then we're going to make them buy back in at a higher rate. When they actually had that, the government came in and they actually stopped the stock market from trading. Robinhood only allowed you to sell. They wouldn't allow you to buy the stock anymore, right? If you guys remember GameStop, how's that fair? Is that you can only sell the stock, you can't buy it. Well, obviously the price is going to go down. These are the types of things that should be investigated, but no one's investigating them. But now they're putting their iron fist down on crypto because, one, it's new. Number two, it's jeopardizing the entire banking system, because if people pull their money out of the bank because they want to earn 4% versus no percent, that's going to jeopardize the way things operate. It's going to put everything under a microscope into why do we do this? So people are going to start waking up and asking more questions. And I think that this is kind of we're just getting started, guys. We're just getting started. And I want to see what happens with this in the future. But kudos to Brian Armstrong, because, you know, I'm sure everybody in his camp was saying don't say anything publicly because it's going to make things worse. But he actually let a lot of valuable information kind of out of the bag. And so we can actually get a sense of what's going on with the SEC and how they're kind of regulating things. And I think it's clear to me that they're in the pockets of the larger institutions, the hedge funds, and the banks. It's just that simple. I don't know how else you could think about this. They're not even trying to help someone who's trying to go by the books. So with that being said, you know, I'm not sure what's going to happen with Coinbase, but, you know, in crypto, I think it's really important that we actually stay together as a community. No more, you know, Bitcoin maximalists, Ethereum maximalists, Cardano maximalists. It's about the cryptocurrency industry, and it's about making sure that we bring that level of independence and freedom to every single person and just liberate people that way. So with that being said, I hope that was informative. Please let me know in the comments below what you guys think about this. I'd love to hear your feedback. I'm not right on everything, so please let me know what your thoughts are. And I look forward to talking to you guys again here real soon.